Toronto real estate is not selling. Eesh. There are pressures for sellers to drop their price, but are they going to, right? And just how bad can it get as we approach the end of the short fall market? Now, I discussed all of this with you and with those kind of questions in mind with the latest release of the numbers from the Toronto real estate market. So make sure you stay tuned. Now, one of the very, I would say, funny things or interesting thing, depends on how you kind of look at it, in like the past 2 weeks is the type of people who are calling me are more buyers than are sellers. And it hasn't been like this for, I would say, like 3 to 4 months since like, July, August. And many of these buyers are wondering if it's actually a good time to start looking now as the seller sentiment is bad and it's only getting worse. So it's always kind of like cyclical and there's always a risk as what I'm about to say, right? But like I've said before, the good deals do not show up in like the average stats. They just don't, right? And you'll see that when I'm about to show you because the stats are the stats. And these deals are to be made when it's like peak fear, kind of like the current conditions. So the way I look at it now and why maybe some of these buyers are calling is if the seller hasn't sold yet, they're like 60 days on the market since fall. They're running up into the holidays right now, which is essentially like a dead period for real estate. Activity is super low. So that thinking is justified if the seller is motivated. And I have seen like a handful of really good deals gone through in the markets I'm watching. So if this is you and you want to start looking to get a better idea of what the lay of the land is right now, what a deal is in the type of property you're looking for, you could book a call with me. Use the link that's right here. It's www.chatwithzen.com. Simply click on the date and the time that works best for you. And then when you see the prop, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome educational real estate content just like this for you. And if you find any of these videos helpful in your real estate journey, do me a solid and help me spread the knowledge by smashing the like button and subscribing to the Prime Properties channel. Much, much, much appreciated. Woo, the numbers are out, and yeah, they just don't look good, they just don't look good. And what's basically happening is Toronto real estate is just not selling. Yeah. Let me explain to you what I mean, right? So have a look at these numbers over here. You see that 32%? That's the current month. And this is for sales to new listing ratio. This means that 1 in 3 properties is actually selling. And let me reveal the rest of the numbers to you that you can see. So this over here is the historically lowest sales to new listing ratio in the top 4 months, meaning that like the absorption rate. And this data dates back to 1996, right? So we're looking like 27 years or 26 years of history. So the last month was the 4th worst month, but the silver lining to that is the previous month in September was the 2nd worst month. It's just bad, right? But the reason why this means Toronto real estate isn't selling is because in the top 4 worst sales to listing ratio, we got 2 back-to-back months of the worst absorption in history since we start collecting data, which basically means that sentiment and momentum is crap and it compounds, right? So this means that the number of active listings or like stuff that's out there for sale will build up, and it's going to have pressure and it's going to have price discovery downwards because there's so much stuff to choose from as no one's buying, right? And keep this in mind as I show you the latest stats on this episode. Now over here, these are basically the October numbers. And if you look at them, like I would say they're like same as last month. And the only reason that like it doesn't look that bad in this chart right now is exactly what I told you earlier, because September was equally as bad as October. September was like a little bit worse than October. So when you compare October to September, they're both bad. It doesn't look like it's moving much. But let me tell you this, there will be lots of headlines about how like prices are the same year over year, or other people talking about, oh, hey, the real estate market's okay. But I would say it's a fairly stupid point, like really stupid right now. And they're just trying to sugarcoat the market because it's not great right now. Not because prices are falling, but more so like just stuff isn't moving. And I'll show a little bit more later on some charts. Now you can see over here that we did get like a tiny smidgen more sales than last month, and prices went up a tiny smidgen from last month, which is kind of normal. It's just a seasonal norm. So like nobody should be getting too excited about that, okay? And the key point here that I will point out is that the months of inventory right here is inching up slowly for the entire market, meaning that even though stuff is selling, not at quickest rate, the number of listings are building up faster, right? So as that kind of ratio kind of keeps going up and up, it means that there's going to be pressure on pricing because buyers have a lot more options to choose from, and it's essentially steering towards a market that favors the buyers. Now, the silver lining in all of this is that new listings have slowed down, but it just means that inventory is not building up as fast. As pricing wise, things are, a little bit all over the place, as you can see over here, but like the movement is so like minuscule and insignificant that I'm just gonna be like, same as last month, which again, I will repeat myself. September was a really bad month, right? Now, if you're wondering why prices are still going up, despite how bad I'm just telling you like the market conditions are right now, it's mainly because if you have like this little amount of sales, right? It's a very small amount. It like skews the average one way or the other. And realistically, the only sales we're getting right now are actually on good properties that are like, entry-level freehold homes. And depending on the area you're looking at, this ranges from like 800,000 to like 1.3. And a lot of condos aren't selling, which would skew the average price down. See, that's just like math, right? And those properties that entry-level homes are still getting bids if they show like 10 out of 10, or they're getting bids if like they're so ridiculously under like market value that they're being fire sale. Yeah, someone's 100% going to buy them, right? But those are like far and in between like the properties that are actually bringing the average home up. Because if condos aren't moving, those like $500,000-$600,000 properties, they're not being added to the average, right? So again, just math. So as we have like price discovery downward because we have so much inventory, you can slowly come to see that prices are going to be coming down. But I'm going to let you know, because right now from like November, December, January, most of the time, seasonally speaking, the average price should be coming down. I'll let you know how much of a deviation it is from like, the seasonal norm, but that's something I'm watching for in like the next 2 months or so, because, people always skew the data depending on how they look at it. Now, here's the active listing tracker that I've been using for the past few months to show you how much inventory there is. You can basically see we're at like 20,000 listings, which is a 5-year high. That's why that thing is so high up on the chart. The last time we had this many active listings was basically in the months of April, May, June in 2017, when we got the foreign buyer tax, when it was first introduced. Inventory at the time like built up like crazy, but like it very much got eliminated afterwards because everyone terminated really fast afterwards, right? And honestly, like outside of that period in 2017, we haven't seen inventory like this since 2008 in the great financial crisis, just to give you an idea of where the inventory level is relative to like macroeconomic trends that we see in the past. So one of the things that I'm personally watching right now to see how like 2027 real estate market shapes up is the amount of terminations between like right now and the end of the year in December, right? So we got like 60 days of that. Most sellers, okay, just saying most, not all, right? If they don't need to sell, they will terminate, and it will reduce the number of active listings that we have in the entire market. That's why you look at the chart over here, like basically the last 5 years, it always tails off in December because nobody wants to sell during Christmas. Maybe they want to have family over, right? Or they know it's just a bad market, so they're going to basically take it off the market. The question is, how many of them are going to come back in the new year? Nobody knows, right? And this is why sentiment is very important. It kind of drives the market. So how many of them are like, say, carrying too much debt? How many of them are having a cash flow problem, right? Nobody knows. And anyone who tells you that they know is probably full of BS. Now, this chart here shows you the current months of inventory. And again, it is the highest we have seen in the last 5 years because I have the same x-axis and the y-axis. So we're technically right now in like a balanced market for all of GTA, which is at 4 months right now. Just for reference, if you don't know, seller's market is basically under 4. But if you go into like certain markets or like micro markets, kind of like the downtown condo, like the CO1 space, like in the last video I made last week, yeah, we're like in a full-on buyer's market, right? So again, this is the entire market, but real estate as normal is very like hyper-localized. Now, for prices to go up above like say the seasonal norm, I think we need to see a few things. One being we need to see months of inventory come down. Like we're at 4 right now. We need to definitely see it come down below 3. The other thing we want to see is the active listings should probably come back below 15,000, right? We're at 20 right now. We need to lose 25% of them. And there's 2 ways that can happen. One, a lot of listings get terminated at the end of the year and they don't come back, so that when we roll into 2024, there's a lot less options to choose from, and maybe we get some buyer demand because, like, I don't know, like the sentiment's a little bit better, which is kind of something we saw last year in fall. Or the second option is the inventory remains diselevated, but demands come back, right? Via, like, the sentiment changing from some kind of rate cut or something, right? Like, I personally think there is demand out there, just not at these rates, nor at these prices because of these rates. The question is, which one is going to give first, the prices or the rates? And this is what exactly everyone is watching right now, right? Both the sellers and the buyers. And this is why I said at the beginning of the video, we have peak fear right now. So if, again, say this is a great assault, but if you are thinking about a move in real estate for some personal reason, or you're like an opportunistic shark, right now is actually easier to find a deal, and when you can strike one when the seller sentiment is absolutely crap, right? Because seller sentiment will very much likely go back up and they'll feel optimistic, when the spring market comes, because they're going to have a new hope, right? Star Wars reference. Because they always have that in every single new season, right? So they'll probably have that for spring as well. Now over here is a chart I want to show you regarding price trends, kind of like what I alluded to earlier. You can essentially see that the gray line is this year is still kind of above the orange line, which essentially means that prices are going to be up year over year. And you can see that even if, like, the prices drop off a little bit, seasonally speaking, we're still going to be up year over year because they also seasonally dropped off last year. That doesn't mean much right now because you can see both of these lines, the gray and the orange, is below the blue line, which was, call it, the lead up to the peak average prices. So, like, this is just math and base effect, and anyone who try to sugarcoat it, like say, oh, hey, prices went up, everything's okay again, I'm going to call baloney on it. And it's just like a stupid way to look at the market right now because it's been so volatile in the last few years. But, the silver lining again, all of this is we're nowhere near the pre-pandemic prices, right? Now, finally, I'm going to touch on some historical data as usual. First one you can see here, active listings. We are well above the average of active listings. We're basically, like I told you, back to where the great financial crisis levels are. And I told you it was bad, right? As you can see in this chart. Whereas if we look at the chart for sales, it's also bad, super bad. We're well below the 10-year average. And like I said earlier, it's worse than last year, right? I think September was like a historic low of like 23 years. I think October is 24-year low. So I'm pretty sure that's a record for how bad it is. Now, this is the last one here is new listings historically. Remember I told you how September listings, like were there a lot of them and we're down a little bit from September? Well, this is to show you, like, yes, we're down a little bit from September, which is good, but just keep in mind we're still above the historic average, right? If we're comparing the worst month in a very long time on a month-to-month basis, it's still gonna look okay. And yeah, so we still have a lot of new listings coming up, but it's less than September, right? That's kind of a wrap for this market watch. And I would say in summary, October was very, very similar to September. Obviously September worse, but when you have 2 months of really bad data back to back, it has pressures on listings that aren't selling to kind of like drop the prices. And as prices slowly drop, we may have that kind of like average price go down, but it takes some time. It's not rapid, right? Plus, when you have this little sales, it's like mixing the two. It's like a slow burn for the market. So it's not super volatile. Like when we had the interest rates go up 300 basis points or 3-4%, it's just the pressure is slowly mounting for the sellers. Like we were saying earlier, at the time under tension, as it kind of gets longer and longer, there's more and more pressure. But how long can they sustain it? We don't know. We're going to find out. Hopefully this gives you an idea of what's happening in the real estate market. And like I said earlier, the seller sentiment is bad if they need to sell. And if you are wanting to kind of like look for those good deals right now, it's actually a decent time to start looking. Not necessarily like buy, but like start looking, see what's out there and see which sellers are motivated. And if you want to be part of that kind of cohort, you can book a call with me using the link that's right here. It's www.chatwithzen.com to determine, what is a good deal for the type of property you're looking for. Anyways, hope this helps. Until next time, your move, your future. See ya. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?